I'm really excited today. In a few minutes' time, I will be meeting with Michael Jackson for our latest episode of Lët'z Walk. Michael's an incredible person, amazing man, amazing career. I've known him for around 4 years now, since I've been in Luxembourg. Michael sits on the board of two of the best-known companies in Europe, Volvo cars as well as AXA Insurance. He previously was a venture capitalist with Mangrove Capital, one of the most successful VCs in Europe, with portfolio companies such as Wix.com. He's also been on the board of several banks. We're currently working with Luminor, one of the most important banks in the Baltics, and sits on the other side of the fence as well in fintech, working with blockchain.com, for example. He really has such a great story. He started his career as an engineer working for Tele2, spent many years in Denmark, but for the past, I think, 15, 20 years has been based here in Luxembourg, most famously for coming here to work with Skype as the Chief Operating Officer, helping it to scale. Very much looking forward to the conversation in a few minutes' time. So Michael, your current project that you're working on is Luminor Bank out in the Baltics. Can you tell us a little bit more about that and how it's going?
Yeah, absolutely, love to. Luminor, for those who don't know what it is a roll-up of the 6 branches of DNB and Nordea, who you probably have heard of, in the Baltics, in Estonia, Latvia and Lithuania. And the idea is to build one strong, local, customer-focused bank.
A super bank.
A super bank,
yeah.
From these six entities that have been left alone by their parent for rather too long.
And how long has this project been going on, and what's the objective? Where's the aim? How long is it going to take?
It's going to take a long time. We started about 4 years ago with it. We're fortunate in having Blackstone private equity as the investors, €1 billion invested in the project. It's a lot of money. We started off by looking at the technology stack, rebranding. You have to build a single brand into the market, you have to build a technology stack, you have to amalgamate a customer base, you have to deal with 6 different groups of employees, you have to bring functionality in that was previously held by the head offices and so on that you no longer have as an independent. So there's massive challenges everywhere in this.
And what has surprised you in the project? I mean, dealing with the old world of banking, I mean, every day I get surprised by some of the amazing or the ridiculousness of some of the processes and technology that these institutions have. I mean, you as a technologist, I mean, tell me some of the shocks that you've experienced.
Well, that's right. As you say, I'm more used to dealing with new technology than old technology, although fortunately I had to have a bit of a background in some of the older technology as well, which helps me. But I'm surprised and amazed and sometimes thankful that some of the old stuff actually still continues to work. We always talk about the newest, fanciest things, but stuff which has been running for 20 years does still actually have a function. Occasionally, and it can be used as the basis for the future. So you don't have to throw everything away on day one.
Yeah. And are you rebuilding the entire stack and porting across the data, or are you bolting on and sort of layering on top of the old systems that are there?
Well, the first job, if you're going to have a single customer experience, you have to bring it all onto one platform, yeah. Because if you can't market under the same name 6 different products that are nearly the same, it just doesn't work. So the first job is to bring everything onto the same platform, in the same operating environment, and particularly with all the peripheral systems. Of course, the core banking is one thing, but all payment systems, interfaces to other networks, reporting systems and things all need to be brought together, and it's a huge job. It's a huge job.
And are you working with a lot of vendors and new, I guess some newer startup-y type fintechs, or is it more traditional players?
Yes, we're not working with many fintechs just yet. That's the next step. The first job is to get the base system running. So we're working a lot with the established vendors, IBM and so on, who are doing that. But I mean, I sit on the transformation committee, we call it, which is at the top of the supervisory stack for all of the projects. I'm chairman of that. So I see what's going on in all the different corners of the organization, and it's extremely interesting. It's extremely interesting that much of the transformation, you mentioned the technology, but a lot of the transformation is the people. You've got, with 6 organizations, 6 management teams that need to be brought together, rationalized, understand their place in the new world, 6 different customer service centers, 6 different branding people and all of that. And that's fascinating to see that go together as well. Very important.
So Michael, we've just talked about Luminor Bank. I mean, your exposure now to this world of banking and finance, where do you think it's going in Europe, let's say, where, I mean, the banks aren't doing well. Return on equity keeps falling. Return on tangible equity keeps going down. Fines all over the place. Do you think they have scope, and do you think they can change and evolve?
Well, the first thing is they have to. You can't have investors putting money into banks when they're not getting a return on their equity, or where the returns are going to be going elsewhere. So that's one thing. We don't have state banks in the same way as we used to. So it's all got to come from the private sphere. So what does that mean? I think it means you need to have either better product, which means you can charge the customer more for services the customer value, and then of course a much lower operations cost. And the operations costs that I see in some of the banks are absolutely horrible. They're not making the use of technology. They're not modernising as fast as we see in the fintechs, for example. And in that way, nothing's going to change.
But I mean, a lot of the cost is related to compliance and reporting, right? Where some banks tell me it's gone up from what used to be maybe 10 years ago, 12-14% of overhead is closer to 40% of overhead. Do you think they now have the scope and agility to be able to modernise as new regulations keep coming at them?
I think one thing is you need to have the compliance tools, the monitoring tools, the transaction monitoring tools that are flexible. And because the new regulations are coming all the time and they're not going away anytime soon, and the requirements are getting larger for everybody, then they need flexible tools. And these tools are being developed now outside the banks, in fintechs, in other organisations. Some of them seem to work rather well. But changing a process where you've got tens of people working in a compliance and the compliance head being responsible for tens of people, somehow nobody wants it to change, perversely.
Yeah, I find that. Do you think any of the neobanks that have arisen over the past 10 years can really progress to a level where they are genuinely challenging these traditional institutions?
I think there's one thing that traditional institutions have that the neobanks don't have, and their true attribute is the one of trust.
Yeah.
The customer, the end user, the consumer, the business, they trust the old names. And that's the one thing that if the banks start to lose that trust, then it's going to be a big job for them to get it back again. Can a fintech become a true bank? Well, yes, why not? I mean, I can see in Luminor that we're building an entire stack up from the bottom, and we'll continue to do that. And there's no reason why somebody else couldn't actually do that. But getting customers to convert for a boring product isn't very interesting. So we need to be working that way. Interesting products, sure.
So moving from old banking to some of new banking, let's talk blockchain and crypto, the hottest topic, I think, at the moment in financial markets. You're on the board of blockchain.com, who also have an office here in Luxembourg. I think you've been involved in it in blockchain technology since around 2013, right? Yeah. Where do you see it all going? Do you really think this is the fundamental basis of the future of financial services? Where do you see the progress and transformation occurring?
Well, it's a massive subject, as you said, and over the last 8 years, 9 years I've been involved with it, it's certainly progressed far. And it's progressed from 20 people in a room, which was basically the entire community back then, to, last week there was a conference with 12,000 people, and that's even in COVID times, so hugely popular, mass adoption. And a day doesn't go by in the Financial Times or something where even they're talking about it today. So it's huge. A multifaceted industry, My own belief is that tokenized assets are something that are extremely powerful. It's something we have a framework for in Luxembourg. And if you think of the traditional financial system, it's really also based around tokenized assets. A deed of a house is a tokenized representation of that house. If you own the deed, you own the house. And why can't that be extended into other categories? I think the amount of product development we're going to see on this over the coming year is going to be incredible. I think it's going to be extremely interesting, and I look forward to some of the, let's say, the more traditional banking partners getting more involved with it rather than less.
Oh yes, I very much hope so. It's still seeing as though they're at arm's length and are scrambling a little bit now. I've noticed that Bitcoin and Ethereum are the two most heavily traded assets now, and for the past several weeks in the US, way above the likes of Tesla, Apple, Google, yet there still seems to be a bit of reluctance from the, let's say, the investment management community, not so much maybe the investors, because there seems to be demand there, but the operators in between to work on these things. I mean, do you think they might miss out on something here? Do you think they need to adapt?
I think they are missing out on it already. I think we're seeing the growth of new actors coming in who are offering product to consumers. Relatively good margin product. These highly volatile assets, they're not for everybody, but a high volatility gives spread, it gives opportunity, it gives arbitrage for people to play with, and it gives a lot of interest. It reminds me a lot of the Forex days of, the back end of the 90s, where day traders were sitting at home doing Forex. It's the same kind of deal.
Yeah, well, the irony is, as you say, there is a lot of volatility in Bitcoin and Ethereum and other cryptos, and some people complain about that, but ultimately for the finance community, they make money from volatility. So, I mean, that should be a good thing, right?
Yeah, if I look at the volumes that are traded on the crypto exchanges today, they're absolutely huge, and they're 10 times greater in a period of appreciation, of volatility. They're doing that. We see those numbers every single day, and the consumers want to trade. So we're building up a sort of shadow system, which is the existing crypto exchanges, who can easily move into fiat, they can easily move into Forex, they can easily move into share trading, maybe easier than the existing financial community can move the other way, because they want to.
Now, I mean, coming downstream and so looking at some of the latest buzzwords in this sector, obviously NFTs, non-fungible tokens, and more focus, be it that it's always been there and is fundamental to blockchain, decentralized finance, DeFi. Tell us a bit more about that. I know it's something you're involved in.
Yes, I'm working on a new DeFi project. What's DeFi? Well, decentralized finance means that all we do is develop software, and the software runs the product. So in this example, you can have called a lending protocol and a liquidity pool. People put money into this liquidity pool, which is lent out to other people. The other people put collateral. When the collateral value is monitored by the software, if the collateral value changes, then there's a margin call or a default event. It's all managed by software. There's absolutely nobody involved with this at all. It's an entire lending industry with nobody.
I mean, I think this stuff is fascinating, but from my own experience over the years, with the power that the traditional institutions have, and obviously the regulators, central bank, do you really think DeFi can, to scale and maybe at some point replace the traditional model of finance? Or do you think the traditional world will just knock it on its head?
Yeah, it's an interesting question, because obviously the old world's got a lot of stakes in the fire there, but the customers of the new world don't really care about the old world, so they're not even phoning the old banks up to ask for these products. So that's going to go ahead. The next question you get is, what about compliance? What about regulatory frameworks? What about supervision in all of that? Well, it's odd. The new DeFi protocols are private, but they're not anonymous. So you can go back through the system, you can find out people are setting up accounts. They're using Lux Trust to establish their account, for example. You go back through the Lux Trust system to find out what's going on and who's doing it. So the data exists to an individual. And then the question is, who monitors that? Because there is nobody there to do that.
Well, that's, I find interesting. One of the biggest arguments to crypto, a number of comments I made on LinkedIn recently, has been, money laundering and KYC. And I think the point I make is that, well, the best way to tackle that is to actually bring it into the system rather than ignoring it, because then if you obey the rules of AML KYC, over time you are building up a transaction history, right? So
Yeah, absolutely you are. Yeah. You're building that, but I wouldn't say we bring it into the old world. No. I say we make a new world that caters for the needs of society going forward. And I think no matter what the technology has been, it's always had to adapt to what the general societal need is. And nobody wants criminals, and nobody wants money laundering, and nobody wants these things. So let's make the new system find a new solution to the old problem, because we don't want to have 20%, 30%, 40% of the costs going to compliance. I would love that people are developing products, and we see it in the Bitcoin Ethereum world. People are developing analytical tools that can proactively find dodgy transactions, and in principle the tool themselves can report the SAR or whatever's needed to be done to the authorities. To do that, it can do it itself. The machine learning, the computer power we have today doesn't require people to sit with Excels and PDFs and things and mess about filling in forms.
Well, I'm gonna call you up on something. You've mentioned the word product a few times. Do you not think, I always find that a very strange word in financial services, because I focus on the financial service bit, in that it's an enabler for the products that we want to buy. Do you not think that we need to get rid of this notion that finance is selling products, that it should all kind of just be happening almost in the background?
Yeah, okay, so it's a question of what you really define as a product in all of this. But I mean, we talk a lot about embedded finance, and that's exactly that. When you go to a web page now, the experience is still rubbish if you want to do e-commerce. We copied the real life experience on the internet way back in 98 or something, which was you went around a shop, you put things in a cart and you went to a checkout. Well, why don't you, as you do now on some of the more advanced services, just go and click your way through, pay automatically, get your choice of a loan, a consumer loan to buy that thing, which is embedded, it's hidden under the surface, using information that you've provided separately. Why type your name and address in 52 times?
Well, Uberize it, essentially.
Well, perhaps, yes, exactly. But just bring it all in so the transaction isn't noticed. And then the product isn't actually the product to the consumer, it's the product to the merchant, to the middleman, or somebody like that.
I've always found that strange. I mean, I don't think I know anyone that wakes up dreams about buying a loan or buying a mortgage. You wake up wanting to buy a car or to buy a house or ensure you want to buy bananas in the future, right? I mean, you don't want finance. You just want to be able to transact and enable your life. And I find this notion of products very, very strange. They sell them as you would buy a can of beans in the shop almost.
People do have need for certain things, of course, and then you do need to describe what you're doing and to explain the value proposition for the customer. But often the value proposition is intangible. It is an enabler, as exactly you say, in which case the product needs to be so simple that people don't really even know they're buying a product as such. They're fulfilling their need. And if their need is to get a mortgage for their house, it's not something you do every day. You're prepared to do a bit of research, I guess, but still the application process needs to be simple. And in most cases, you almost don't need one.
Big question for you, Michael. Innovation in Europe. I mean, I think I get the sense we're not really up to par with the Americans, and now even increasingly so with Asia and in particular China. You've been an investor in tech for many years, including at one of the leading venture capital firms in Europe, and a lot of your investments were overseas and not into Europe. What is your take on this? What is going on in Europe? Why can't we build a Google, an Amazon, or an Apple?
I mean, that's a really difficult question, of course, if we could answer that. I think I'd divide it into two bits, really. What's going on elsewhere and what we're doing here. So if I look here about some of the initiatives that are being run, the larger initiatives, they're government-run initiatives, they're EU institution-run initiatives, run by massive committees. Let's take an example, this Gaia-X project, which has just been launched the other day. A supervisory board of 24 people or something like that. The famous of German industry is on the board of that. That doesn't feel very dynamic to me. And it's the dynamicism that I see, and I saw in Mangrove. We spent a lot of time investing in Israeli companies. We were fortunate in having a very good relationship there. The speed, the dynamicism, the action, the drive there is just in general higher than it is in Europe. And I think it's because their desire to succeed, or their need to succeed, They're existential threats they have. Mean they've got to get on with things.
Do you think Europe, I mean, it's talked about a lot, I hear it a lot, but do you think Europe really accepts failure and learnt lessons from failure? I mean, bankruptcy law still makes you a criminal, right? In most countries in the EU.
Yeah, it does, exactly. Failure isn't accepted in Europe still. We like to say in our startup world that it is, but it's not. As you say, you have to declare it. If you're a board member of a bankrupt company, you won't be on the board of anything reputable since then. It makes you very careful, but it might make you a little bit too careful, you could argue, with all of that. I think failure it's key. We talked about it for, nearly for decades in Europe now about that. But it's getting better, but it's not changing. I think if I talk about drive in China, I work on the board of Volvo cars with a large Swedish operation, a very large Chinese operation, and therefore you get exposure to how the Chinese development environment works, and it's fast. They put engineers at it, they throw time at it, they put universities with very tight coupling to industry, so students are coming out with good education directly into industry through corporations, through state-run corporations. Sure, you can like it or not like it, but the corporations there, and we don't have that in Europe.
But do you think it's part of the risk culture issue as well, in that, I mean, you talk about committees, I mean, any meeting I'm in talking about, be it a business case or a new business, everyone's sort of chiming in with what could go wrong all the time rather than doing something. Is that part of the issue, do you think?
Yeah, I think it is. Yes, I think that is. Yes, I think that is part of the issue. I think we spend an awful lot of time worrying about downside and not very much time thinking about upside. It's one of the fantastic things with Mangrove and other venture capital companies is you do work with people who do have a glass half full attitude in it. Glass is overflowing usually, even if there really shouldn't be any water in it. But they have a lot of energy there, and I think that keeps you going in that environment, but I don't know how pervasive it is in society as a whole.
I mean, one thing, a friend of mine who runs global asset management at Santander tweeted something yesterday, recently, about how Europe does seem to be actually recovering faster than other regions, and evidencing the huge interest and volumes of trading in ETFs, European-focused ETFs. And I thought a little bit about that, and I thought, well, yes, in the sense of a socialist European environment, you can see how that has kept us strong and helped us recover from COVID. But do you think, I mean, decisions by committees maybe in the long term, and this huge tranche of public finances that seems to be available to everyone with some form filling, doesn't really maybe lend itself to a innovative culture, right?
I think if you have too much public money flowing around the system, that can never really be a good thing, because the money that taxpayers pay, they don't want it just to be thrown off on all sorts of random initiatives. It needs to be managed very carefully. It's the responsibility of the politicians to do that. Again, you talk about the recovery this year. I mean, I've seen the recovery in China firsthand, and it's incredible. That exists as well. So, they have centralized control of almost everything there, but they're able to recover super fast as well. So it's not just a function of the socialist system in Europe that our recovery is around.
And what less do you think Europe is able or willing to learn from the speed and agility and development of China? I mean, I get the sense to some degree we almost see it as a frenemy situation, and tending towards enemy actually in the medium to long term. Do you think we should be more open and learning from them, as they did from us ultimately 20 years ago to get to where they are, right? Yeah.
Yeah, well, now they're way ahead, to be quite honest. I think the difference in dialogue is thinking forward and thinking backwards. And a lot of our European policy is built around protecting the past, not developing the future. Yes. And we see this in a lot of the regulations that are coming along. What are we doing? How are we managing these things? And I think that's important work to be done. We've got new regulations coming along for governing AI, for example, and you start to look at those. And why would you develop AI solutions in that environment in Europe when you can develop them outside of Europe? We've got to be careful with that. And we know they're there for good reasons. Data ethics is really important to us, and it's part of our lifestyle in Europe as well, which is not in some other countries. So we've got to balance the two, but we need to make sure we don't go too far in the wrong direction and curb innovation.
Yeah, I know. I mean, there's so much we could talk about on this subject, but I think you gave me the quote of the day, which is we think backwards rather than think forwards. And I think that's the key and fundamental thing that we need to look at addressing. Michael, it's been a great pleasure talking to you. Thank you very much for your time here today. I mean, we could talk for hours and I love listening to you, but we really appreciate all the effort you put in. Thank you so much.
Well, thank you for listening to me. I hope it's interesting.